Hey everyone, welcome back. Today is an absolutely historic day in the global markets, and I am so excited to guide you through this explainer. We are literally witnessing a massive macro and geographic realignment playing out right in front of our eyes. I mean, think about it. Geopolitical tensions are resolving, institutional capital is migrating entirely across hemispheres, and non-human entities are basically rewriting the rules of market liquidity. And the clock is ticking loudly today. It's May 31st, 2026, which means we're staring down a tremendously high-stakes monthly close. We aren't just looking at the end of a trading month here. We're facing the final expiration, an actual judgment day for some of the biggest geopolitical prediction contracts in the world. As we close the books on May, the entire architecture of the market is shifting. Okay, let's dive into this. Here's our roadmap for today. We're going to cover the judgment day for speculative bets, Western markets facing liquidity bottlenecks, regulators fast-tracking interpretive rules, Latin America emerging as a safety land, and finally, the AI agent economy boom. Starting with Part 1, Judgment Day for Speculative Bets and the expiration of May's biggest contracts. So today marks the official expiration of some incredibly high-volume prediction market contracts. The big number flashing on the board right now, 73%. According to Polymarket data, traders are pricing in a 73% probability that the Strait of Hormuz will return to normal traffic, meaning above 15 ships daily by the end of the day today. With a recent 10-day ceasefire easing tensions between the US, Israel, and Iran, we're seeing a massive clearing out of global war risk. This relief rally has caused oil futures to drop 10%, while Bitcoin has surged right past that $78,000 mark, triggering hundreds of millions in short liquidations. And this brilliantly illustrates the brutal reality of prediction markets. While the broader macro bets are resolving positively, specific sector bets are facing a really harsh reality check. A major contract called for the privacy coin Zcash to hit $420 by today. But the current reality? Yeah, it's struggling to even hold the $326 level. This massive miss is resulting in some incredibly heavy, painful liquidations across the privacy token sector right as this monthly candle closes. Moving on to Part 2, Western markets face liquidity bottlenecks and the retail viewership crisis. So, while the global macro picture is experiencing this relief rally, traditional Western crypto markets are dealing with a severe retail viewership crisis. Data just in from CoinGecko confirms a pretty stark reality. Centralized exchange trading volumes completely plummeted by 39% in the first quarter of 2026 compared to the end of last year. In fact, analysts are pointing out that May is on track to be the weakest month for spot trading volume since all the way back in November 2023. Retail investors in the West are simply stepping away from their screens. But here's the thing. It's not just retail volume drying up. Institutional on-ramps are hitting major roadblocks too. Critics are sounding the alarm over proposed index rule changes by MSCI, calling them an intentional monetary roadblock. Industry watchers believe these rules are specifically designed to move the goalposts and limit the inclusion of digital assets in mainstream institutional indices. So we're essentially seeing a squeeze on liquidity from both the retail floor and the institutional ceiling. Which brings us to Part 3, Regulators Fast-Track Interpretive Rules, Bypassing the Clarity Act. To really grasp how the regulatory landscape is shifting right now, we need to understand what interpretive rules are. With Congress completely gridlocked, the SEC and CFTC are making a tactical pivot. Essentially, they're using interpretive rules to enforce compliance, using the frameworks they already have on the books. This lets them completely bypass the lengthy, politically fraught process of waiting for new legislation to actually pass. By using this maneuver, authorities are actively gaining immediate oversight over things like DeFi interfaces and stablecoin yields, regardless of whether the Clarity Act ever makes it through. Which leads us to a really critical question. For months, the industry has pinned all its hopes on the passage of the Clarity Act. But if the SEC and CFTC can just implement interpretive rules to bypass Congress entirely, does the industry's reliance on that single piece of deadlocked legislation represent a dangerous single point of failure? I mean, it's a serious vulnerability for the market if everyone is completely unprepared for these sudden, fast-tracked regulatory headwinds. Let's look at Part 4. Latam emerges as safety land, forming the Southern Hemisphere's secular bull. Now, let's pivot away from the regulatory gridlock of the West for a second, because the global map of capital is rapidly realigning south. And this shift was recently supercharged by a major policy walkback. Argentine President Javier Milei stepped away from his core pledge to dollarize the economy, stating pretty simply that people don't want it. Regardless of your politics on the decision, the market reaction has been absolutely explosive. This pivot has reignited massive regional demand for Bitcoin. Without the US dollar as an official option, Argentinians are turning right back to Bitcoin as their primary sovereign exit to protect their wealth from the continuously devaluing peso. So what's actually driving this Latam secular bull market? Well, it's kind of a perfect storm. It's serving as a hedge against global volatility. It's being viewed as a literal safety land for capital fleeing war-torn regions. You've got this massive sovereign exit demand from everyday citizens. And crucially, institutional capital is rotating into LATAM-focused crypto infrastructure to offset those volume drops we saw earlier in the Western centralized exchanges. Guys, it is a massive new economic engine forming in real time.
Finally, Part 5, the AI agent economy boom, where machines are taking over on-chain liquidity.
Because while humans in the West are stepping away from the trading screens, machines are happily taking their place. Now, what's really interesting about this quote on the screen is its source. Renowned economist Nouriel Roubini, who is famously known across the entire financial world as Dr. Doom for his perpetual market pessimism, has actually taken a rare optimistic turn here. He is predicting an AI-powered boom of the world economy. And let me tell you, when Dr. Doom is bullish on a technology, the market pays very close attention. And the sheer scale of this boom is almost hard to wrap your head around. We are looking at a $28 trillion agent economy. Recent reports show that a staggering $28 trillion is expected to flow through crypto's agent economy. And 76% of that volume? That's simply autonomous AI bots shuffling stablecoins and executing trades. As we move into the second half of 2026, autonomous AI trading agents are fully expected to provide the vast majority of all on-chain liquidity. The machines aren't just participating in the market anymore, they kind of are the market. Let's wrap things up with our conclusion. The market outlook for today, May 31, 2026. So, bringing all of these fascinating global threads together, the crucial point you need to take away is this. Watch the $78,000 Bitcoin support level closely as the monthly candle closes today. With the definitive clearing of the Hormuz war risk via those prediction markets and institutional capital aggressively pivoting into Latin America to escape Western liquidity bottlenecks, the removal of this final geopolitical overhang could easily trigger a massive short squeeze as we head into early June. We are quite literally watching the foundation of global finance rewrite itself today. We're seeing capital migrate from the traditional West to the dynamic global South. We're seeing market liquidity shift from human retail traders to 24/7 AI trading agents. The landscape has fundamentally changed, so I want to leave you with this question to think about. As this massive transition unfolds, are you positioned for the great realignment? Thanks so much for joining me for this explainer. Keep your eyes glued to the charts today and never stop learning. I'll see you next time.